Hey, what's up guys? John here. Jobless claims finally rise as layoffs soar, the fastest pace since Lehman. So over the last 14 years, 13 years, we're starting to see jobless claims. Now, what I think is going to happen, many people might disagree immediately, but I think by the end of the video they're going to agree with me, that wages in America are going to come down 20 to 40%. We're going to see a real crash in wages. We're going to see something really big. Now, many people would say, well, how can wages crash when the cost of living is only increasing? It's a good question. The quality of living is going to be coming down in America relative to many third world countries. What we're going to start to see here is inflation likely continue to rise, Jerome Powell to continue increasing interest rates, and Joe Biden to increase taxes. He claims against the rich, but in reality, the rich, they have excellent legal networks, tax teams, attorneys. Their situation is buttoned up. They're going to be okay. Don't worry about them. This is going to impact the little guy. Everybody in between that's not in the 0.01% is going to get hit with what's going on right now. For example, I own a company and we're looking to hire some employees, and it is so hard to find employees. Point blank, it is. If you're a business owner, you're probably dealing with the same thing. And so I'm driving to the office. I'm thinking about it in my head as I'm driving down the road. And I get to a stoplight and I look ahead of me and there's a bus. And this bus says, drive this bus, earn $27.62 an hour. I'm like, okay, well, that's pretty high, but okay, cool. But then I look at the bonuses, right? Tuition reimbursement, paid time off, health insurance, retirement plan, right? So if you were a small business owner like myself and you're looking to hire, for you to compete with that same type of job, you'd have to offer $40 an hour, $38 an hour, right? $7,500 a month for that one employee. 5 years ago, that would be an engineer's salary. You go to school for 4 years or 8 years, you really beat down in your craft, become the best you can be inside of your field, and then you would get that type of wage. This is your bus driver making $7,500 a month, $7,000 a month, right? How are small business owners going to be competing with that? They're not. And when you look at the data, 47.3% of America works for small business. And so as the cost rises, what's ultimately going to happen? The cost of living is going to likely continue to rise, and so are the expectations on employers to be able to offset these costs. And so what I believe is likely going to happen, as we step into this recession, or some would call it depression, we're going to start to see more and more and more layoffs. And as this begins to occur, this is what's happening right now. So this is kind of setting the tone for what we're walking into. And by the way, today's video is sponsored by GreatCreditFast.com. If you want to fix your credit and you want to position yourself to invest in distressed real estate in this upcoming recession, we would love to help you at GreatCreditFast.com. Also, with Great Credit, you can do things such as a balance transfer and get out of high interest credit card debt. There's so many different credit card offers right now offering up to 0% intro APR for up to 21 months. So it's a really great way to fix your credit. You can fix your credit now so you can get out of debt tomorrow. At GreatCreditFast.com, you can give us a call at 561-430-5900. Take a look at this. So, jobless claims finally rise as layoffs soar at the fastest pace since Lehman. U.S.-based employers announced 77,770 job cuts in February. It's a 410% higher than the 15,245 cuts announced the same month last year. Right? February's total highest since 2009. So far this year, employers announced plans to cut 180,000 jobs, up 427% from the 34,309 cuts announced in the first 2 months of 2022. It is the highest January-February total since 2009. What many people don't realize is as Jerome Powell continues to increase the interest rates, the cost to service existing debt for businesses gets more expensive. As the cost of utilities is increasing, the cost of property insurance, taxes, all these things increase, it's going to have a net result on business owners. So as the business owner is getting hit with also inflation and all the cost of running their business, the wages are also increasing and the cost of their debt service is increasing as well. And they have a consumer that has less disposable income to support all their newfound debts, meaning it's going to be a bad year or 2 or 3 for small businesses, which is going to have a net negative impact on real wages in America. And so what I think is going to happen is we're just going to start to see these job cuts come in at levels we've never before seen, and people are going to start taking jobs for less money than they thought, they would be taking it for a year or two ago. Because remember, a year or two ago, the media was like, You deserve, a fair wage. You deserve this, and you deserve this. They were really kind of pumping the Great Resignation. What I think is going to happen is the employees that were loyal to their businesses or to their employer, and they had a great relationship and they really stood by them, I think they're going to get benefited. If I had an employee that was with me before all this, which I do, but if I had more employees like that were thinking about leaving and they didn't, they stayed loyal to me, I would reward them, and they would be the last ones to get fired. They would be the last ones to be let go, because loyal to me means a lot. Certainly, employers are paying attention to this rate increase plan from the Fed. Many have been planning for a downturn for months, cutting costs elsewhere. If things continue to cool, layoffs are typically the last piece in company cost-cutting strategies. Well, as this is all happening, here's what Biden just proposed. This came out today, early this morning. Biden's tax the rich budget, capital gains rates near 45%. So, they want to do this. The budget proposal would increase capital gains rate to 39.6% from 20% for people earning at least $1 million. Well, people earning at least $1 million probably have a lot of employees. They're probably not solo entrepreneurs, most of them, to equalize the taxation of investment in real wage income. Biden is proposing to increase the Obamacare from 3.8% to 5%. The billionaires tax, he's saying they want to propose it 25% minimum tax rate on the 0.01%. 25% minimum tax rate. They're saying they currently pay 8%. Billionaires are not going to TurboTax. They're not going to H&R Block. No offense to those companies, but they're not going there. They have, they have payrolls, they have teams. They are paying taxes in which they deem as fair, right? So they're coming up with their own numbers, and they're building out their plans accordingly. Whether they have a certain amount of write-offs that they're already baking in for the year, whatever they're doing, they're not just going to write a check, they're worth $1 billion. They're not going to go write a check for $250 million to Biden. It's just not happening. Income taxes, it's all across the board. Corporate taxes are increasing. Corporate taxes back to 28% from the 21% after Trump's cut. Carried interest, private equity, crypto losses. Even retirement accounts are going after. The plan would end a loophole that allows the wealthiest, including billionaire Peter Thiel, to accumulate savings in tax-favored retirement accounts. Biden would limit the amount taxpayers with incomes over $400K can hold in a Roth retirement account. Real estate, they want to get rid of the 1031 exchange. So real estate investors that are buying properties and fixing them up and then selling that property, rolling their profits into another building and deferring the gains into the future, many people would say, oh, that's just the real estate investor, making money off the neighborhood. That real estate investor is no good. But what people don't realize is that the real estate investor, if he buys a property for $1 million and sells it for $2 million, he just doubled the tax base for that city. So the school gets more funding. The street services get more funding. Police department gets more funding. Fire department. The city benefits immensely. All the property owners in the neighborhood benefit immensely because the comps just went up. All these things, what are they going to do? What are business owners going to do? They're going to likely see this as a problem. They're going to see this as a way in which they need to cut their expenses. They need to play things more defensively. And so my logic, when I look at this and I say, okay, everything is going up. Consumers have less disposable income. The economy is getting into a scarier place. People are going to be much more defensive and hoard cash. What are they going to do? They're going to be laying off more and more and more. And so these charts are very reminiscent of what I would expect to happen. But I think this is actually kind of just the beginning. I think we're going to start to see this go much further than just, the big tech companies. I think this is going to hit brick and mortar hard. Here comes the official BLS sponsored data, which shows the initial jobless claims, which jumped from 190K to 211K last week, above the 195,000 expectation, the highest since December, but still extremely low. Historically, continuing claims also rose to 1.718 million. Notable non-seasonally adjusted initial claims jumped 237K. That's jumping. But of course, New York, California saw claims soar last week. I mean, it's very clear what's going to be happening here. We're going to be seeing a whole new relationship between employer and employee. I saw something on TikTok today where the employee went to the employer and he's like, oh, I'm taking PTO, paid time off, and I'm going on vacation. And the employer's like, well, I have to see if we have someone to cover you. And he's like, no, I don't think you understand what I'm saying. I'm taking it off. This is what's happening. And, you don't have a choice in it. I feel like that is going to start to fade in the coming 6 months to a year. That dynamic where the employer has so much authority over the employee, or the employee has so much authority over the employer, I think that's all going to start to diminish. And we're going to see employees become much, much more committed to an employer that can offer a stable source of revenue to the employee. Because when you start to see these layoffs and people are just jumping from job to job to try to service debt, and they're living a life in which is much more chaotic and expensive than they anticipated, they're going to start to appreciate their jobs. And as this is all happening, all these big tech companies are going to be outsourcing overseas. And small business owners are going to be doing whatever they can do to make things work. They're going to start outsourcing overseas. So what I think is going to happen, real wages are about to crash in America, and they're going to start to crash, in Europe as well. You look at what's happening in Europe. The dynamic in which people were expecting this high wage for an employer, I think is going to be a thing of the past. What do you think about this? Where do you see this all going? How does a business owner, a small business owner, compete with salaries like this, paying somebody $30, $35, $40, $45 an hour for basic work? Now, many people say, well, that's what people deserve. That's what, I'm not debating that. But if the employee is only supplying $20 of value to the business, how can the business afford to pay $40? They can't. So unless the employee is going to be bringing in so much more value to the business owner, then the business owner is either going to fire the employee or close up shop. What do you think? Drop below, hit the like button. And again, today's video is sponsored by GreatCreditFast. If you want to fix your credit because you know problems are coming to this economy, we would love to help you at GreatCreditFast.com. Give us a call for a free consultation or go on the website and schedule a time that works best for you. Our phone number is 561-430-5900. I'll catch you guys in the next video.